Hello, in this presentation we're going to write checks for expenses within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be entering some checks now, kind of some normal transactions, entering some checks. In order to do that, we're going to go to the plus sign up here to see our normal transactions, where we have the customers, the vendors, the employees, and the other. When we're writing checks, we're typically writing them to vendors, people we owe, people we buy stuff from. That's where the checks will be. We're going to select the checks item there, and we're going to go through this process for writing the check. So obviously this is a check number. It's going to be then reducing our checking account, and the other side will be going to whatever account we decide that it needs to be going to, depending on what we're paying and who we're paying. So first we're going to say that we have insurance. So we're going to pay for insurance of some kind, probably liability insurance we're going to say here. And we're going to say the name of the company is Safe Insurance. So we don't have that name here yet. We need to add them. So I'm just going to type that in. So we're going to type in Safe Insurance. And then we're going to select the add button. So we're going to add it, and it's going to add it as a vendor. So we want it as a vendor. That's correct because we're paying somebody, so that would be correct. We'll continue tabbing through here. So we're going to have this from the checking account. That is correct. We're going to have the mailing address. We'll keep it at just the mailing address. We don't need the actual address here in order to process the check, but it might be good information to have. Then we're going to say the payment date. The payment date is going to be 012821 for our problem here. The check number should populate automatically, so that should be correct. Remember that the check number should tie out to whatever checks that we are going to be using. Whether we use pre-printed checks that we're going to be printing on here, we still need to use those checks, which will have a check number that will be external. And or if we're using just a checkbook or something like that, it should line up. And then we have the print later button if we want to print these checks at a later time. And we're going to scroll down to the account now. This is the thing that, of course, is different than what we would normally put just in a checkbook, which is the account that we need to apply this to. Insurance is a little bit tricky because we would probably think it should go to insurance expense, but typically we put it into some type of asset account because usually we pay for insurance more than just a month at a time. And any insurance we usually prepay, meaning we have to pay for the insurance before we get the coverage. So it should go into a prepaid account, an asset account, and then we'll apply it out with the adjusting journal entries at the end to an expense at the end of each period, at the end of each month or year, and we'll go through that process as well. So what we want is something like a prepaid insurance account. If we go through the drop down here, we see that a lot of expenses here. We see an insurance expense, and that's tempting to do, but we really should put it into the prepaid. And the reason is because if we pay for a year here of insurance, then if we put it all into an expense this month, it'll look like this month was a really bad month because that will bring down our net income a lot. And really it's covering an entire year. It's not really fair to the month of January to write down the whole insurance expense. So we have to really apply it off to the year that will be covered to be fair to all months that are really benefiting from the expense. So in order to do that, we're going to put it into a prepaid expense, other current asset account, not set up yet. So we're going to go ahead and set that up. We're going to just type in what we want it to be, prepaid insurance, and then we're going to add that account. And we're going to choose the account type. It's going to guess that we want an expense, but we don't. We want to put it into an other current asset account. So it's going to be an other current asset here. And then the subcategory, we have a few different options for the subcategory. Here we have a prepaid expenses option down here. That looks like a good one. We're going to use the prepaid expense option, and it's going to be prepaid insurance. There's going to be no other description. It's not a subcategory of any other account. We don't have any beginning account balances as well, so that's we don't need that cell at all. And we will then save this information. Description, we don't have one here. We might want to put one if it's possibly how long we're paying this insurance for, possibly the terms of the insurance, but we're probably gonna have to look at the contract when we do the adjusting entry no matter what. And then the amount, we're gonna say the amount is $11,000. Now, we're not going to say it's billable and we don't have a customer. These two fields were set up because we set up the option to have these set up. If you're working with the default settings, you may not have a billable option as well. This would be billable, meaning it's billable on our invoice, meaning we're going to bill a client for this information. So that would be useful there if we had a customer that we were going to bill for that information. So once again, just to recap this is going to be decreasing the checking account. And the other side of it's not going to go to an expense, not going to decrease net income by $11,000, but go to another asset, that asset account being prepaid insurance, which will be expensed in the adjusting process, but on a monthly basis in accordance with when it's consumed rather than when we pay for it. So we're going to go ahead and save and new for this one. Next, we're going to write a check for office supplies, and we will go to the financial statements and check out what happened there. But first, let's write a few more checks here. We're going to go to office supplies, and we're going to buy office supplies from Staples. Once again, if we select the drop down, we're looking for Staples. It's not there, so we're going to type in Staples, and we're going to add that. That's a store, of course, we're adding, which will be a vendor. So we're going to say save here. Tab through, it is the checking account that we are going to be writing the check from, decreasing the checking account. No mailing address, we just have the name. The date's going to be as of the end of the month. It's keeping the last date that we were working on. That's good. January 28th, 2021. And the check number should auto-populate. We're not going to be printing these. And the check and the amount then, or the account then, we're going to say it's going to go into some type of supplies. So we're going to scroll down here. It should be an expense. And if we scroll down, we can look through here and we have office supplies. If we were to just guess and type in, even if we didn't start with the office and we just typed in supplies, it still finds that. It doesn't have to start with the word, and it still kind of picks it up. So we can start to auto-populate that if you have a lot of accounts. That's very useful. And select this item. Could be helpful to tell us what the supplies are, especially if it's $500 maybe. When someone audits this, they might be saying, maybe we should have capitalized that or something like that, because we're going to say the amount is 500, by the way, 500. And therefore, so you might want to put in what the supplies were, meaning do we want to capitalize it or not? If it is big enough that we should be putting it on the books as an asset rather than just writing it off as a supplies here. But in this case, we're just going to write them off as supplies for this problem. And that will say that the checking account, once again, going down. The other side being office supplies and expense, which is going up. And that expense would then bring down net income. So then we're going to say save and new. Once again, save and new. Next check we're going to write is going to be for the electricity, for the utilities expense. So we're going to say that we get our utilities from a company called Edison. So we're going to type in Edison. This is the first month of operation, so note we don't have these vendors in here, but later we will, and it'll be really repetitive. So it'll be really easy. Next time we see a bill and we're going to say Edison, it's going to be able to auto-populate for us, and we'll know exactly what is happening. The first month of operations, of course, is a little bit more difficult most of the time because we have to set up vendors and possibly accounts for them. Then accounting's cyclical, so obviously we're going to do a lot of the same stuff after that first point. So here we have the vendor, and then we're going to say save that information. Going through, we are working with a checking account, of course. It's Edison. We're not going to put any address at this time. The date's going to be January 28, 2021. Check number 1008. We're not going to be printing this out. And the account then, we're going to say is utilities. We could select the drop down and find utilities. They probably are going to provide one through the QuickBooks automatic generated trial balance or chart of accounts. We could start typing utilities, and there it is. So we're going to say utilities and tab through that. And we are going to say the utilities is 620. Once again, it's not billable. We're not going to be charging any invoice for the utilities or be charging a customer for the utilities. So this will, of course, bring down the checking account, bringing up utilities expense being part of net income, then bringing down the net income on the profit and loss statement. We're going to save and new for that one. Next one, we're going to say that we're paying the phone bill, and our phone company is Verizon. So we're going to type in Verizon, again, new vendor, because this is the first time we paid Verizon in this system. So we're going to have to add Verizon here, add them, and save that. After we do that, however, of course, next month, this will be a lot easier, and we'll see that as we go through. It'll be able to auto-populate that information. Checking account, of course, is going down. Mailing address, we're just going to keep the name and not the address. The date, once again, is January 28th. We're printing all these checks or writing them all at the same time. Check number is auto-populating, as we can see. We're not going to be printing these checks. And the account then will be something like a telephone expense here. Now this is one where it gets a little bit more tricky because when we think about these expenses, of course, we have a lot of leeway in terms of what the grouping should be. Oftentimes people think that the grouping for the expenses is totally standardized, and there's a lot of standardization in the types of groups that people use, but we could group them in different ways, meaning, for example, here, some people might put this into utilities and group the electricity and the gas and even the telephone in utilities. Others may want to break this out. Most people, I think, would break out the telephone expense because it's significant. But the gas versus the electric, possibly you want to break that out depending on the industry you're in. Possibly it's not worth the time to break that kind of thing out. So those are the decisions that need to be made. How detailed do we want to be in our expenses? More detail is good a lot of times because it gives us more information about what we're spending in particular areas, but it also, if we have too much detail, we are just not going to look at anything. It's like if you're given a book that has 10,000 pages, you're probably not going to read page 1. If you're given a book that summarizes that down into a few hundred pages, then you can probably read that book. So we're going to say that here we got the telephone. Let's type in telephone and see if anything pops up. So we don't have a telephone expense, so we're going to go ahead and add telephone expense. So I'm going to go ahead and add this expense. Now note, a lot of times, like I typically put expense in the name. Here they're going through the strategy of not putting expense in the name, and you can tell that it's expense by the fact that it's in the expense category. So when it shows the category, you can see that if you like having expense in the name to just tell you that it's an expense, you can do that. If you want to conform everything together, you can have expenses in the name of all expenses or not. But if you don't have something like an expense in the name, you have to look at the category type to know it's an expense. Obviously, something like the telephone would be easy to know. But if you're looking at something like insurance, which had that prepaid insurance, it's not so easy to know. So just another conventional thing to think about. So here's the expenses up top. We're going to say it's not going to be advertising or promotion. Let's see what else we got in the detail type. So within the detail, I will just select the utilities. So utilities, and then we're going to name it telephone expense, no description, and not selecting anything for the subcategory. We're going to go ahead and save that information. And then we're going to say that, of course, what's happened here, the checking account's going down, telephone expense is going up, and we need the amount here by 360. It's not going to be billable. We're not charging anybody else for our telephone expense to our customers that we will later invoice. And therefore the telephone expense is going up by 360, which will bring it down net income by 360. We're going to say save and new. Now we'll take a look at the financial statements and see what happened with some of these activities we have done. We're going to go ahead and close this back out. We will go to the balance sheet first. We're going to go to the reports on the left-hand side, reports, and then we're going to type in balance sheet. Here is the balance sheet. And we're going to put into the date range, the date we are working on, 01/01/212, 01/31/21, and January 1st, 2021 to January 31st, 2021. Let's run that report. Within the checking account up top, we wrote a bunch of checks, so this account should be going down. Let's see if it's going down as we believe it should be. Here we have the, I'm gonna make this a bit smaller. These are all checks. I'm gonna go ahead and make this a bit smaller. And maybe this a bit smaller. I'm just grabbing this and making this a bit smaller. All right, so then we can see the insurance company, staples for office supplies, utilities, and telephone expense. So there they are going down in the checking account. Let's look at the other side of these activities, or at least some of them. So we're going to scroll back up to the top. We're going to go back to the report. Now the funniest one is the first one where we had the insurance expense. We didn't put it into an expense. It's right here on the balance sheet. It's in the other current assets accounts. So there's the insurance for $11,000. It's not affecting net income. We're calling it an asset. All we did was pay from the checking account to buy something we have not yet consumed. When will we consume it? As we use it in order to help generate revenue over the term of the insurance policy, as it's covering risk for us. So here it is. Here's the insurance. If we click on that, then we will, of course, go back to our check. So let's close this back out. The other accounts, or the other side of them, will be going to the other report, the other main financial statement, the income statement, or as QuickBooks calls it, the profit and loss. So we're going to type in the profit and loss report here, profit and loss. We're going to change the dates from 01/01/21 to 01/31/21 and January 1st, 2021 to January 31st, 2021. We will run that report. And then the other side of this is going to go here. So we have these three expenses that we just set up. The office expense at the 500. If we select that, then we see the check. If we select the check, then we see the actual check. Closing this back out. Going back to the report up top, back to the report. If we see the second one, of course, we can do the same thing. I won't click on them all, but here are the three checks. These are all expenses. Note, again, the convention that I put telephone expense here. If we're following the convention of the chart of accounts that were given to us through QuickBooks, they did not put an expense on all the expenses. And we know that these are expenses here because, of course, it's in the expense category. But if we were to see them within a check, for example, if I went on this check or the utilities, let's go here, utilities, and I go into this check, when you just look at the description down here, something like this, it just says utilities. You don't see the fact that it's an expense. Now, of course, we probably assume it is, but we can't see it there. If you go to the drop down, however, then it's going to give you the subcategory on the right hand side, and you say, oh, it's in the category of expenses, and that's why I think QuickBooks sees it as repetitive to say everyone is an expense. So we're going to close that back out. So that's just a convention to keep in mind. So some people might think it's sloppy to add an account and put expense by it when none of the other ones have expense by it. Just, a couple things to keep in mind. Also, we could be grouping these things together. You got to keep in mind your grouping. I've worked with customers that, really like detail, and they group everything, even if it has like a $60 line item. If you got a $60 parking ticket, instead of putting it into auto expense, you'll put it into parking ticket expense, and probably might not be worth it because although you might want to track how much you're spending on parking tickets, it might be a one-time thing that's not worth breaking out into its own category and setting up different accounts for. So there's just the grouping is something that you just got to get a feel for in terms of your personal taste and the taste of your company, and keeping consistent with what has been done in the past. You don't want to redo the whole system. We need consistency, or if you are to redo the whole system, do it in a either one full swing and say, hey, we're starting everything over here, or do it in a slow, systematic kind of way so that you can have some consistency and see the changes from report to report.